Hey guys, how's it going? Welcome to a trade slash session recap for Wednesday the 24th of August 2022. So daily chart, pretty simple again. We're obviously in a sustained bearish trend where we recently, a couple of days ago, had a bearish daily break of structure, which now has formed a new swing range for us, right? So we're now trading between well, we don't know exactly where the swing low is yet until we have at least a significant pullback, but we know that this is the current swing range that we are within, right? So, potentially we can expect a pullback up to these levels of supply. That said, once we, initially get that daily break of structure, we're not always going to pull back straight away. We can pause for a bit and fall for quite some time before we actually get that sustained swing pullback, just like we did previously here, okay? So does that mean we're going to fall like this? No, of course not. We have no idea. It's quite hard to predict, but that's why we don't have to predict, right? We react to what price action shows us with the systematic frameworks that we use, i.e. if we were just looking at the daily chart, we would at least look for a daily bullish change of character to signal an internal pullback, right? And then look for those larger bosses to signal the swing pullback, so on and so forth. So in other words, we can kind of use the 4-hour chart and M15 to really help us with this. Ignore these lines, these are just the annotations I use, which I don't want to delete, just for posting markups and stuff like that, as it helps me save a little bit of time. But yeah, likewise, we've had the 4-hour break of structure, right? That swing break of structure, so we can at any moment now expect that that swing pullback may occur. So far, what we've had is we've had that bullish change of character. It actually happened just there. I've just dragged it across just so you guys can see it a little bit more visually, but we did actually get that initial change of character there, then it pulled back, and then we got that kind of true commitment during New York yesterday on the Tuesday with a decent amount of momentum. However, potentially there's always the risk, right, that we just had a change of character just to facilitate a small internal pullback up into the supply zone, right? The supply zone being a flip of the demand zone. So you can see price came into demand, reacted, clearly failed to put in a higher high and pushed to the downside, right? So we have our demand to supply flip there. Okay, so this is why we use the framework that CHOC just signals the start of an internal pullback, and it's only when we get an IBOS that signals the start of the swing pullback. Because what can happen is you can get a bit of a small CHOC, price can come up to here into the most recent level of supply, and then we could just continue down, right? And obviously that sort of pullback like this, it's not really a swing pullback relative to recent price action, right? That's just an internal pullback, and we could get a few of those. We could get a bit of a CHOC here, just to pull back to a little bit of supply and then continue down. And then it's only when we get like a true IBOS like that, okay, now it's much more of a strong signal we're getting that bigger swing pullback. So that's why now we use the framework of CHOC signals internal pullback, and CHOC signals the start and end of internal structure pullbacks, and IBOSes signal the start and end of those swing structure pullbacks, okay? Now, this still could be the start of that true swing pullback. We don't know. It's just we don't really have true confirmation like that. If we kind of started to pull back like this and then broke this high, okay, now, yeah, I think it was very, very likely we're having that much larger swing pullback, and we can start to look for these higher levels right up in those daily supply levels too, okay? Because as I went over the other day, right, you can have, let's see, I think there was a CHOC here. Yeah, there was, right? Price, it's hard to see, but this candle here failed to break the previous candle's low, which means we did actually have that fractal pullback. Price then CHOC'd to the upside, but it's just to have a small internal pullback, right, before it continued down. Then we had another CHOC here, but again, this is where we actually only really kind of got a true significant internal pullback, and then we moved to the downside. But now you can see that those CHOCs allowed us to have a bit more of a convincing internal pullback, and then once price actually went up and broke it, and we got that IBOS, okay, now that 4-hour swing pullback kicked in, right? Once we got this IBOS here, okay, now we're getting the pullback, the actual swing pullback of that larger leg, right? So yeah, just kind of wanted to go over that because it can set your expectations of what price may be happening here, because we can go, okay, we've had the 4-hour break of structure, we're expecting a 4-hour swing pullback, we've had a 4-hour bullish change of character, so now potentially when we come into demand, we can expect this movement here. Maybe that could happen, I have no idea. But the other possibility is that we just CHOC'd bullish to come up into supply, just to have a little bit of an internal pullback to then continue that movement. So I'm always cautious when you only kind of have a little 4-hour CHOC or on any time frame, right, that you're applying this framework to. I'm always a little bit cautious initially. I'm aware and I'm looking for that move to potentially have that swing pullback. But I'm just a bit cautious about it, right? If we had like, like this, and then we have that IBOS, okay, now when prices come into this low, I have a lot more confidence that we're going to be getting that move. That's kind of all of the point I'm trying to make here. So I can kind of see this going either ways. Like shorts from within here could potentially go through it. Longs from within here could potentially be that move. Okay, so I'm open to both possibilities at this moment. So if we drop down to the M15, and I've bar replayed it back to just before the start of the Frankfurt Open, the start of the London session. I don't know why these have reappeared. Just going to hide those if I can. Okay, it's not going to work for me. Cool. And hide. There we go. So M15. I appreciate some of you may have only this as internal structure because it was quite small relative to the recent price action. But I'm happy to call it a swing just because otherwise it can get super confusing trying to explain to you guys the internal of the internal of the internal when we start to get big price action like this. But it all comes down to the same thing, right? This would be, if you had this as your internal structure rather than your swing structure, this would just be your larger internal strong low, right? It's all relative to the recent price action of how you should interpret what things mean. Appreciate that's a bit of a puzzle to some of you guys who are new, but just keep it simple and follow the swing structure as I have here, if it is a little bit confusing. Okay, so broke up to the upside yesterday, which essentially was our bullish M15 break of structure, which is what our 4-hour chalk was. So from an M15 perspective on its own, if we forget everything else, the expectation would be we'd have the swing pullback at some point, form that swing high low, and then look to take out that swing high to potentially facilitate that larger 4-hour swing pullback, right? But yeah, like I'm saying, when we only initially just get that 4-hour chalk and it's that first M15 trend change, when the overall trend is heavily bearish, sometimes these can be false traps, right? And we can just continue down. That can happen, not always, but can happen. Okay, so always kind of trade these, just a little bit cautiously. So we had quite a strong reaction from that 4-hour supply. And remember, again, in the back of our minds, if we're thinking, well, we only chopped bullish and the M15 only switched bullish just to mitigate this 4-hour supply, and we could continue that movement, just to refresh your minds, that's something that we have to be cautious of, right? That potentially this movement was just to do that, to continue to the downside. But there's still a decent probability we come into 4-hour demand, and I'm still more than happy to look for longs in case we do have that pullback. So it's just kind of, being open to trade both, really. So that's kind of like my overall thought process in terms of like the slightly more medium to longer term outlook, I guess you could call it, like more than just intra-session. But from an intra-session perspective, this is where I can then look at the internal price action of the swing structure, right? And we have nice, clear internal swings here, right? So this then gives us a internal range to then work within, okay? Where we have the M15 strong internal high, right? And we have the M15 weak internal low. Why is it weak? It's weak because it hasn't broken any internal structure, okay? So at this moment, what we can draw on, right, we have this level here is our M15 supply. There's a little bit of a supply chain going on there, right, following that last mitigation. Okay, cool. So at this moment, right, what would I be thinking? Well, everything I've just said, obviously, don't want to keep going over that. But in terms of the more immediate price action, the M15 internal structure has shifted bearish to facilitate the swing pullback, okay? We have pulled back down into below the discount of the leg, you can see by that red line, okay? We have mitigated some M15 demand, but this is very insignificant demand. It's just sell to buy wicks, which basically means it's just more of an M5 zone, no inducement in the leg, right? There's plenty of stuff below it. We haven't quite come into 4-hour demand just yet. So, the expectation would be that probably we may get at least one more internal leg down into these lower levels. Okay, that's what I'd be thinking at this point. So potentially it's worth the risk. So shorting from this strong internal high, that's the confidence behind it, but it's just not ideal because when we're already in the M15 discount, there's a higher probability that that swing pullback may be finishing, okay? But we don't have true confirmation of this M15 swing pullback ending until what? Until we get that bullish IBOS. Once we get that bullish IBOS and it disrupts the bearish order flow, okay, now the swing high low is likely in place and we can follow these bullish internal ranges until we take out the swing high. Okay, otherwise we can keep following this internal structure, but obviously the deeper we pull back into demand, into the discount, the lower probability following the internal structure can be. Okay, so yeah, at this moment I was happy to look for shorts if we got the nice M1 entry model from within here, literally just to take a quick movement and just take like full profits at these lows, and then again look to see if we can get some longs from within here. Okay, but if I get a long from within here, I want to make sure there's enough risk to reward to target into what would have been then a new strong internal high, right? So I can remove my risk, but we'll get into that in a minute. So let's play price forward a little bit towards kind of session open. So just before Frankfurt opened, we did actually have a bearish internal breaker structure, okay? So this becomes obviously just an IBOS, and then we have a new internal range to work within, okay? So this is where you can like rein these in or delete them so you don't get too attached to a bias, you're aware they're there, and we can look at the new range that we're within. Okay, we won't draw the low on just yet because we don't know where it is exactly, and this will be it. So now, exact same sort of thought process, right? If you want to keep trading the bearish order flow, if you want to keep trading these strong lower highs, you can do, but obviously this shorting from here is even lower probability when we were originally looking to short from here. Why? Well, we've pulled even deeper into the discount, but the biggest factor is we're now within 4-hour demand. This grey box is at 4-hour demand. Remember, so if we look back at the 4-hour chart, well, you don't need to, but remember we had that 4-hour bullish chalk. Potentially now this is going to be the demand that continues that swing pullback. So shorting from here becomes even lower probability, right? And also, if I just play this forward a little bit, right, we start to pull back. Yes, we haven't mitigated this demand. Okay, so that is at least one decent tick in the box to look for another movement down into here. That's what I was thinking. But you also have to be aware, right, we have mitigated the M15 range demand, right? Within this 4-hour demand, price doesn't have to come down into the single candle pivot. It doesn't have to do that, right? And we could always have that movement there. So that is just something you have to bear in mind, right? So as price was coming back up, this is where then I basically was happy to try and look for one more move if we got a very clean M1 entry model, and if I could get at least 5R risk to rewards, right? 5R to the weak M15 internal low. So at this point, before I even jump on the M1, basically, as you guys probably know, the idea is I'm looking to short from this high and trade to the downside. So this is what I would simply call a low probability, like medium time frame / higher time frame setup, because I'm trying to short against the M15 swing trend. And even if you don't have this as a swing structure, this would be your larger internal structure. So you're still shorting against that. You're shorting against price already pulling back down into the discount. You're shorting against a 4-hour demand mitigation, and you're shorting against like that M15 range demand as well. Okay, so not what I would call very high probability on the medium and higher time frames whatsoever. And I wasn't really that too bothered about it, but as we'll see in a minute, I'm just going to drop back one candle on the M1. There was a super clean M1 entry model, and kind of when I saw that, I was happy to take it as an intra-session trade. And basically looking to target one last M15 internal leg to try and go down into that refined M15 zone, but really I would be taking all of my profits at that week low anyway, just seeing it as a quick intra-session trade. Okay, so price is coming up into our M15 strong high, not going to do anything until that M15 zone is mitigated. Okay, at this point now we can zoom in a little bit, right, and start to see what is going to happen on the M1. So I need at bare minimum, if I'm going to take obviously a confirmation entry, not taking a risk entry, just looking for a confirmation entry, I need to see an M1 chock, right? So nothing to do here until we get that M1 chock. Price pulls back, price pulls back. Okay, I'm thinking, right, we've had a very, very strong reaction here. This is decent, right? We have our M1 demand. Okay, so let's see what happens. At least still need the chock. Okay, we have a reaction from demand, so probably thinking we're going to get one more leg to the upside. That's a pretty strong reaction. Now what happens next? Okay, now we get the bearish chock. Okay, so overall we've had a pretty damn strong rejection from M15 supply. We've had our M15 chock. We have now an M1 flip, because what's happened is price has come into demand. It's reacted, clearly failed to put in a high, and then pushed to the downside, right? So anywhere from the base of that reaction to the top of the reaction is your M1 demand to supply flip, but obviously this is a big range. So we want to refine that a little bit more, and we can bring that into the extreme candle there. Now, it's not just a flip, not just a chock. What else do we have? We have the flip sweeping liquidity, because we can see it takes the liquidity behind this high here, right? Essentially you have price comes down, up, down, and then takes the liquidity behind that high and then rolls to the downside. So now we have a flip that sweeps. But also what I love about this is that at this moment when price is pulling back, this is the only zone, only unmitigated zone in which I want to trade from, right? There's no unmitigated extreme above, because all of this, if we draw it on, is mitigated, right? That zone is mitigated by this candle here, right? Supply is created, the price pulls back up into it and mitigates it. So we know that we don't want to trade from that zone, because I'm only interested in completely unmitigated zones, right? That was not like a massive wick that I'm interested in trading from. Again, this is obviously being mitigated, so now we can follow the chain. this makes perfect sense to want to trade short if you're happy with the overall, trade idea on the M15 of what we're trying to play here. So I set a limit on the distal, stop just behind the high. I can't remember exactly how I sized it, but it was roughly something like that. And then basically, because I could get more than 5R2 near the low, I was happy to take the trade. I think my stop was a little bit big. I think it was like 2.7 or something, something like that anyway. So price pulled back, tagged me in, and then I shortly got stopped out after, okay? So I would just summarize this as very clean M1 entry model, but low probable idea. Like the M15 is not great, right, for all the reasons I've explained. Now, one other thing I would say is maybe missing from this entry model is what I would call a true liquidation. Now, I know liquidity can get a bit subjective because you can go, well, we've swept these highs here, and that is true, right? That's a liquidation. You could say we've also liquidated this high here. Again, that's also true because there will be liquidity behind these highs. But if we want to look for like the highest probable liquidations, basically what for me that's going to be is when you have very clear sort of big equal highs, those then get swept, and then we get that as a liquidation, or you get what I call like a structural liquidation, which is where you get a strong high that is swept. Okay, so on the M1 that would be this high, break structure to the downside, so that's what I call like a strong structural high. Price then comes back up and breaks this high. So obviously if this is a strong high that caused a low, there's going to be a lot more people who are going to trade this, so therefore there's going to be a lot more liquidity behind it. So if price comes up and then sweeps that high and then we get the chock, that for me here is going to be a much stronger liquidation. Okay, so they're really kind of the two I really want to see, either proper obvious like equal highs like this that then get swept, or like a strong high or low that gets swept, just what we kind of call structural liquidity, because this high here caused a low, right? It's a strong M1 high, then it gets swept, and then we get another chock again. That is going to be a real strong liquidation. Okay, so I don't personally need to have that like in my plan, but it's just something liquidity is something I'm trying to kind of consciously think about a lot more and try and come up with something a bit more very mechanical with that in terms of defining it, because I know Tomas has done a lot of work on this. And the other thing as well is because there's no inducement in this M15 leg, right? It's just one straight push. That can be another reason why you may want to see a stronger liquidation on the M1, okay? So yeah, hopefully that makes sense. But all in all, I was more than happy to hit this trade in this instance, right? So just going to rein that in for a minute. And do you know what? I'm actually going to delete it just so we can keep the analysis nice and clear. So now what do we have at this moment? Well, can you see how the liquidation is now better? Because yes, we sweep this high, but what is it? It's a strong M1 high that we have swept. Why is it strong M1 high? Well, it's a high that caused a low, right? You can see here, price pulled back, but it never broke like the M1 low there, right? So it's not really it's not a strong M1 high, it's a weak high. Price then comes up, and then this high here where my cursor is, what does that do? It comes down and gives you that M1 boss. So now this is a strong M1 high. So that's that structural liquidity we're talking about. Now price comes up and takes that liquidity. That's a much stronger liquidation, this one I've drawn here, than say this, or potentially some stuff over here, right? This is like that true recent liquidation, so I much preferred that, okay? But yeah, again, if you want to wait for the M1 CE, this is your M1 chock level, so you need to wait for this to go. So then price comes down, nice strong V-shaped reaction so far, and you can see we just melted straight down through here. Now, yes, there is technically a flip, right? If you draw this on, okay? I mean, there's one here which I didn't even notice. That's tiny, like, buy to sell wicks, not something I'm going to be interested in, but yes, technically a flip. It's more of like a 15-second. But we have this bullish candle here, right, which does flip this range, right? Now, this for me does meet the criteria of what I view as a flip because it's a bullish candle reaction from the demand range. However, the best flips are ones, and what I would recommend if you're starting out or beginner or trying to get consistent, is try mainly to focus on the flips where you actually get like the fractal pullback. And what I mean by that is, let's say this is your demand zone, you want to see price come into it and then like it actually react with like candles, as in the next candle failed to break these previous candles low, right? You actually see a true pullback rather than just, you see this, all of these candles break the prior candles low, it's all one down move. Yes, on like the 15-second, it would have been a pullback, so these can play out, but I would say when you're kind of, starting out, try and only take the flips where you actually see a true kind of structural reaction, and then price comes down, okay? And it will hopefully help you to save a fair amount of losses. Yeah, I just didn't really see that in this instance as high probable enough. There's no inducement in the leg, it didn't sweep liquidity. So in this instance, this is when I kind of, I'm much more keen to just take the extreme, especially when you consider kind of how low probable the overall, again, high time frame setup is, right, it's not the best setup in the world, but the M1 entry model here for me was pretty clean, and I was happy to take kind of one more stab at this idea. If I had got stopped out on this, I was kind of, that was me, I was going to leave it. I think I had about 3.3 in this, and yeah, again, just kind of, I was targeting just before the low, so just over 6R. So price pulled back, tagged me in, so there's a nice little entry there, and then we moved to the downside. Now, once we broke the low of the pullback that tagged me in, i.e. this level here, I was happy to remove my risk and move that to break even. As now these days, I don't know if everyone knows, but I don't use partials anymore. I'm just looking to remove risk, that is. I look to trail my stop loss to break even. Now, if I loved and absolutely loved the high time frame setup, and I really thought it was going to be a big move, sometimes a little bit more conservative to when I'll decide to break to when I will decide to trail my stop loss to break even. And for instance, like it may have been other times I'd wait for like this low here to go, because like if I'm really trying to capture a super high probable, what I think is going to be a high probability high time frame move, I want to give the trade as much room as possible to breathe. But in this instance, I'd already taken a loss. I'm not in love with the overall M15 setup, as you guys know. So once we pull back here and we break this low, I want to trail to break even, because if price breaks this high, it's probably likely we're going up here. So actually, I tell a slight lie. I didn't move exactly to break even at this point. I trailed just behind this high, simply because I thought, for a pip or two, if price comes up into this high and continues down, right, because technically this high broke this low, right, I may as well stay in the trade. It was just slightly later on I actually trailed to in front of my stop, which I'll show you in a minute. Now, at this point, if you're not in the trade or you want to look for a scale-in, are there potential setups here? Yes, there are. The next unmitigated extreme, right, obviously isn't this level here, because we can see it's already been mitigated. So this is where I would trail it to here, and you can look at this potential zone here. Now, before I go through these sort of scaling entries, again, my recommendation to you would be just, when it's, okay, let me keep it more simple. When the market environment isn't great and you're already trying to trade kind of a low probable idea, like I've hopefully made super clear kind of how I view the M15, I personally want to try and be getting in at like the start of this potential move. I want to be getting in right up here, so I have the best stop loss protection. I don't really want to start chasing price in here, because this is when you get these choppy ranges and then that ends up happening, or maybe it goes up and then it goes down, but you're trading in the middle of a tight range. It's not ideal. So maybe this one, because at least it's kind of still the start of the move if we get that movement and you can trail to break even. But as we start to do this, for me personally, I don't really want to risk my capital getting involved. So I saw this, it makes sense. It's somewhat of a flip. It obviously flips some demand from within here, right? There is technically a sweep. Again, not the best. It's probably the lowest probable sweep I have as my definition of a sweep, but it does sweep that high. There is some nice inducement here. Okay, so it makes sense, but just not one, I was bothered to look to scale in, okay? But yeah, with that one, I don't know what kind of stop you could get away with, but I always use a minimum of 2 anyway. So yeah, you've got more decent RR. Maybe you want to consider just targeting 5R as well in these instances. And then obviously you've got, if you want to keep following like the M1 structure, this is what it's saying, right? These are valid ways in which you can scale in. Like this for me, I'm just going to delete this just to keep it nice and clear. Like this would be here. It would meet my rules for an M1 continuation model. Why? Well, we've had it's called a break of structure, where we're trying to look, where we are trying to look to trade from, previously mitigated a zone, right? This high mitigated a demand zone, so we're kind of following that demand chain. And yeah, arguably as well, it like flipped demand in this wick, but I wouldn't really get too caught up in that. You're more just trying to follow the M1 structure, right? This is a strong M1 high. You're following the supply, right? It makes sense. We may get another move from here, but yeah, I'm just not bothered to trying to chase these at this moment. And yeah, this is where I just basically had a full TP at this low. Wasn't in love with it, but once we got the break of this low here, like another continuation of the structure, this is when I had my stop loss just above here, and I was just basically letting it play out and do its thing. Yes, as it starts to play around here and not really looking too great, you could potentially just think of taking profits, but for around sort of 3.5 R, like it's not worth it for me. If I'm going to take higher time frame setups that I'm not in love with, i.e. like the M15 doesn't look great to me, I want to be averaging a high enough risk to reward on these types of trades, i.e. minimum 5R. So I was happy to just let it break even. If I get stopped out, I get stopped out. It is what it is. So yeah, got stopped out, break even from here. And that brings us to wherever price action is now. So yeah, not bothered about capturing any of these moves. So like as we come back to the M15, right, like this for me, this range is done. I have no interest in trading this range now. I'm either waiting for this low to break, okay, and then I'll look for potential longs from within here, right? or we wait for this to break to the upside. Okay, now the internal structure has done what? Then it's shifted bullish. That gives us true confirmation that the swing pullback is over, and now we can look to trade those bullish ranges to at least target that high, with the potential we're going to get that much deeper for our swing pullback, right? Because if we break this level here, that will be a 4-hour bullish high boss. Okay. So yeah, so for me, I'm not happy like that. That's, do you know what I mean? The range is done. There's no risk reward for me to want to keep playing. Maybe you could look for some shorts from within here to try and get that move potentially, but I'm just not too bothered at this point. Like the clean moves are done for me now. So in terms of coming into New York, looking for longs, try and remember everything I said at the start of this session about why I'm cautious of this demand holding. Yes, for me, the M15 swing trend is bullish. We've had a 4-hour bullish chop. This demand could hold, and I'm more than happy to look to play that movement. But I also wouldn't be surprised if this fails and we do actually come down, simply because that 4-hour chop may have just been to mitigate that 4-hour supply and continue that overall movement. So I'm open to both possibilities, right? I'm not too worried or concerned. Now, when price comes into this M15 demand, you have to be cautious of there's no inducement. It didn't sweep liquidity, but we are building at least some nice structural lows in front of it, which helps. In terms of would I just jump on the M1 straight away? Yes, if we got a clean M1 entry model, I'd be happy to take it, as long as there is obviously enough risk reward, because we're obviously getting quite corrective and we're quite near this demand anyway. So if price like kind of moves like this, it's like this, and it comes into here and it gives me a long, like if there's M15 supply right in front of me, is it worth taking it? No, that's when I'd wait for the IBOS or wait for the chalk. There needs to be enough risk reward. Whereas if we were to just dump now with like straight M15 candles and then we come in, yeah, then you could potentially consider it because you've got enough risk reward to get in long here and target up into that supply, and then you can remove risk and or take profits. Okay, so it's hard for me to say exactly what I'd wait for in each scenario because it depends on how price action looks when it gets there. Okay, but if you're not sure and you want to wait for higher probability, right, wait for that IBOS first, then we can trade with the internal trend. Or if it comes with a lot of momentum, right, and it's like this, you could potentially wait for an M15 chock if you wanted. But remember, an M15 chock just signals the internal pullback. So try to get in straight away, and as price pulls up into the strong internal high, you want to try and remove your risk, right? Because that could continue to the downside. Okay, so just some food for thought there. We do have an unmitigated M15 wick down here, which obviously then would have some nice inducement, so this could play out. I'm open to that as well. I'm just not personally in love with trading from M15 POIs where like the distal has already been mitigated, right? The distal of that candle, you can see price already came in, filled up a lot of those orders and caused the move. So I'm just a little bit more cautious with them. So yeah, just something to bear in mind. You may want to wait for an M15 chop and something a little bit more to confirm that level, but that is totally up to you. So yeah, hope you guys took some value from that. Yeah, one break even and one minus R for me there. It is what it is. I was happy to kind of play this move, and this might play out, but that's just what happens when you're playing counter trend and trying to trade against strong high time frame demand mitigations. It's going to be a little bit more choppy and a little bit more corrective. So it is what it is. Alrighty, cheers guys.